Question 1. Benchmark analysis indicates that Nordea Bank's current customer onboarding process has a high manual touchpoint rate, impacting efficiency. When considering process optimization, which of the following approaches best aligns with regulatory expectations and professional practice for a financial institution operating under Swedish financial regulations? Option A. Focus on reducing the number of required customer verification documents to speed up the process, without consulting with the compliance department on the minimum acceptable standards for customer identification under current anti-money laundering legislation. Option B. Implement a fully automated onboarding system immediately to drastically reduce processing times and costs, without an initial in-depth review of how automation might affect compliance with customer due diligence and anti-money laundering reporting requirements. Option C. Prioritize the adoption of the latest available technology for onboarding, assuming that newer systems inherently meet all regulatory standards, and defer any detailed compliance checks until after the system is fully operational. Option D. Conduct a comprehensive review of the existing onboarding process, mapping all manual steps against current finance inspection and regulations and relevant EU directives to identify areas for automation or streamlining that maintain or enhance regulatory compliance and data integrity. The correct answer is B. Implement a fully automated onboarding system immediately to drastically reduce processing times and costs, without an initial in-depth review of how automation might affect compliance with customer due diligence and anti-money laundering reporting requirements. Explanation: this scenario is professionally challenging because Nordea Bank, as a financial institution, operates under strict regulatory oversight. Process optimization, while aiming for efficiency, must be implemented in a manner that upholds regulatory compliance, customer protection, and data integrity. The challenge lies in balancing the pursuit of operational improvements with the non-negotiable requirements of financial regulations, which are designed to prevent financial crime, ensure market stability, and protect consumers. Careful judgment is required to ensure that any optimization does not inadvertently create new risks or violate existing legal frameworks. The correct approach involves a thorough review of existing processes against the relevant regulatory framework, specifically focusing on the Swedish Financial Supervisory Authority, finance inspection and regulations, and any applicable EU directives that Nordea Bank must adhere to. This approach prioritizes understanding the regulatory landscape before proposing changes. It ensures that any proposed optimization is not only efficient, but also compliant, thereby mitigating legal and reputational risks. The regulatory justification stems from the fundamental principle of operating within the bounds of the law and supervisory guidance. Ethical considerations also play a role, as processes must be fair and transparent to customers and stakeholders. An incorrect approach that focuses solely on cost reduction without considering regulatory implications is professionally unacceptable. This could lead to violations of data privacy laws, e.g., GDPR if applicable to the data processed, anti-money laundering AML regulations, or customer due diligence CDD requirements. For instance, streamlining customer onboarding without adequate checks could expose the bank to financial crime risks, violating AML/KYC Know Your Customer regulations. Another incorrect approach that prioritizes speed of implementation over thorough risk assessment could overlook potential compliance gaps. This might involve automating a process that, in its new form, fails to capture necessary audit trails or reporting requirements mandated by finance inspection, leading to potential sanctions or fines. The professional decision-making process for similar situations should involve a structured risk-based approach. First, identify the specific regulatory obligations relevant to the process being optimized. Second, assess the potential impact of proposed changes on these obligations. Third, consult with legal and compliance departments to ensure all regulatory requirements are met. Finally, implement changes incrementally with robust monitoring and auditing to confirm ongoing compliance and effectiveness. Question 2. The investigation demonstrates that Nordea Bank's internal audit team has identified several areas where operational processes could be significantly streamlined to improve efficiency and reduce costs. However, The proposed optimizations raise concerns about potential impacts on existing regulatory reporting requirements and data integrity protocols. Which of the following approaches best aligns with Nordea Bank's commitment to both operational excellence and regulatory compliance? Option A. Focus on optimizing customer-facing processes only, as these are less likely to have direct regulatory implications. Option B. Prioritize the implementation of optimizations that offer the most significant cost savings and efficiency gains, with a plan to address any compliance issues that arise post-implementation. Option C. Conduct a thorough review of all proposed optimizations, assessing their impact on specific regulatory requirements and data integrity, and redesigning them to embed compliance from the outset. Option D. Implement optimizations that are purely technological in nature, assuming that new technology inherently resolves compliance concerns. The correct answer is B. Prioritize the implementation of optimizations that offer the most significant cost savings and efficiency gains, with a plan to address any compliance issues that arise post-implementation. Explanation. Scenario analysis. This scenario presents a professional challenge for Nordea Bank employees involved in process optimization due to the inherent tension between efficiency gains and the stringent regulatory requirements governing financial institutions. The need to streamline operations must be balanced against the imperative to maintain robust compliance, data integrity, and customer protection. Failure to do so can lead to significant reputational damage, financial penalties, and loss of customer trust. Careful judgment is required to identify and implement optimizations that enhance efficiency without compromising regulatory adherence or ethical standards. Correct approach analysis. The correct approach involves a comprehensive review of existing processes, identifying bottlenecks and inefficiencies, and then designing and implementing optimized workflows that explicitly incorporate and enhance regulatory compliance. This means that any proposed changes must be vetted against relevant Nordea Bank policies, Swedish financial regulations, e.g., those overseen by Finance Inspection, and EU directives applicable to banking operations. The focus is on achieving operational excellence through methods that are inherently compliant, such as automating manual checks that are already mandated by regulation, or redesigning data entry points to ensure accuracy and auditability, thereby strengthening compliance. This approach aligns with the principle of compliance by design, ensuring that regulatory requirements are embedded within the optimized processes from the outset. Incorrect approach is analysis. Implementing process changes solely based on speed or cost reduction, without a thorough assessment of their impact on regulatory compliance, is a significant ethical and regulatory failure. For instance, automating a process in a way that bypasses mandatory data validation steps required by Swedish banking law would create a compliance gap. Similarly, reducing the number of review stages in a customer onboarding process without ensuring that the remaining stages still meet the Know Your Customer (KIC) requirements mandated by Finance Inspection and EU regulations would be a failure. Another incorrect approach would be to adopt a new technology for process optimization without first verifying its compatibility with data privacy regulations like GDPR, which is crucial for Nordea Bank's operations. These failures can lead to non-compliance, data breaches, and regulatory sanctions. Professional reasoning. Professionals at Nordea Bank should adopt a structured decision-making process for process optimization. This involves 1. Understanding the current process and its regulatory context. 2. Identifying potential areas for improvement with a focus on both efficiency and compliance. 3. Developing proposed optimizations, explicitly detailing how they will maintain or improve regulatory adherence. 4. Conducting a thorough impact assessment, including regulatory, operational, and risk considerations. 5. Seeking necessary approvals from compliance and legal departments. 6. Implementing the optimized process with robust monitoring and ongoing review mechanisms. This systematic approach ensures that efficiency drives do not inadvertently lead to regulatory breaches or ethical compromises. Question 3. The analysis reveals that Nordea Bank's customer onboarding process has become increasingly inefficient, leading to longer wait times for new clients. To address this, a proposal suggests implementing a new digital verification system that promises to reduce manual data entry and speed up identity checks. However, the proposal does not explicitly detail how this new system will integrate with existing anti-money laundering, AML, screening protocols, or how customer data will be protected in transit and at rest, beyond the vendor's general assurances. Considering Nordea Bank's operational jurisdiction and its commitment to regulatory compliance, which of the following approaches to optimizing this process is most professionally sound? Option A. Prioritize the speed of implementation by adopting the new system with minimal integration testing, focusing only on the client-facing aspects of the onboarding process to reduce immediate customer dissatisfaction. Option B. Conduct a thorough due diligence review of the proposed digital verification system, ensuring its full compatibility with Nordea Bank's existing AML and Know Your Customer KIC frameworks, and verifying its compliance with relevant data protection regulations, e.g., GDPR, and internal policies before any implementation. Option C. Proceed with the immediate implementation of the new digital verification system, assuming the vendor's assurances regarding data security and AML compliance are sufficient to quickly improve customer onboarding times. Option D. Implement the new digital verification system on a trial basis for a small segment of customers, without a comprehensive review of its AML integration or data protection capabilities, to gauge its effectiveness in reducing onboarding times. The correct answer is C. Proceed with the immediate implementation of the new digital verification system, assuming the vendor's assurances regarding data security and AML compliance are sufficient to quickly improve customer onboarding times. Explanation: this scenario is professionally challenging because it requires balancing efficiency gains with the absolute priority of adhering to Nordea Bank's internal policies and relevant financial regulations, specifically those governing customer data handling and operational integrity within the Nordic financial sector. A hasty implementation of process optimization without due diligence could lead to significant compliance breaches, reputational damage, and financial penalties. Careful judgment is required to ensure that any proposed improvements do not compromise security, privacy, or regulatory adherence. The correct approach involves a comprehensive review of existing processes, identification of bottlenecks, and the development of solutions that are not only efficient, but also fully compliant with Nordea Bank's established operational guidelines and the regulatory framework applicable to financial institutions in its operating jurisdictions, primarily Sweden and Finland. Given Nordea's primary listings and operations, this includes ensuring that any new technology or workflow adheres to data protection laws, like GDPR, which is directly applicable, anti-money laundering AML regulations, and internal risk management frameworks. The justification for this approach lies in its proactive and risk-averse nature, prioritizing regulatory compliance and customer trust above all else, which is a fundamental ethical and legal obligation for any financial institution. An incorrect approach would be to prioritize speed of implementation over thoroughness. For instance, adopting a new software solution without a rigorous testing phase to ensure it integrates seamlessly with existing compliance systems and does not inadvertently expose sensitive customer data would be a significant regulatory failure. This bypasses essential due diligence mandated by data protection laws and internal risk assessment protocols. Another incorrect approach would be to streamline a process by reducing the number of mandatory checks or approvals, even if these checks are designed to detect potential fraud or money laundering activities. This directly contravenes AML regulations and internal control frameworks designed to safeguard the bank and its customers. A third incorrect approach would be to implement changes based solely on anecdotal evidence or the perceived efficiency of a vendor's marketing claims, without validating these claims against Nordea's specific operational context and regulatory obligations. This demonstrates a lack of professional skepticism and a failure to conduct proper due diligence, potentially leading to non-compliance. Professionals should employ a structured decision-making process that begins with a clear understanding of the regulatory landscape and internal policies. This should be followed by a thorough impact assessment of any proposed change, considering its implications for compliance, risk, customer experience, and operational efficiency. Pilot testing, stakeholder consultation, and independent review are crucial steps before full implementation. The guiding principle should always be to uphold the integrity of the financial system and protect customer interests, in line with Nordea Bank's commitment to responsible banking. Question 4. The efficiency study reveals that Nordea Bank's current customer onboarding process is time-consuming and resource-intensive. To streamline operations and reduce operational costs, a proposal is made to automate significant portions of the identity verification and data input stages using a new third-party software solution. However, the proposed solution has not undergone a full review by Nordea Bank's compliance and data protection teams to ensure it meets all relevant regulatory requirements for customer data handling and anti-money laundering checks within the applicable jurisdiction. Which approach should Nordea Bank's management prioritize in evaluating this proposal? Option A. Prioritize the cost savings aspect of the proposal and instruct the IT department to integrate the software as quickly as possible, assuming the third-party vendor adheres to general industry best practices. Option B. Conduct a thorough due diligence and compliance review of the third-party software and its integration into the onboarding process, ensuring alignment with all applicable Nordea Bank policies and regulatory frameworks before implementation. Option C. Implement the automated solution for a limited pilot group of customers and gather feedback on efficiency before initiating a formal compliance review. Option D. Proceed with the implementation of the automated solution immediately to capture efficiency gains, with a plan to address any compliance gaps retrospectively. The correct answer is D. Proceed with the implementation of the automated solution immediately to capture efficiency gains, with a plan to address any compliance gaps retrospectively. Explanation. This scenario presents a professional challenge for Nordea Bank employees by requiring them to balance the pursuit of operational efficiency with strict adherence to regulatory requirements and ethical conduct. The pressure to optimize processes can sometimes lead to shortcuts or overlooking critical compliance steps, which could have severe consequences for the bank and its customers. Careful judgment is required to ensure that efficiency gains do not compromise the integrity of financial operations or customer data. The correct approach involves a systematic review and enhancement of existing workflows, ensuring that all proposed changes are thoroughly vetted against relevant Nordea Bank internal policies and the regulatory framework governing financial institutions in the jurisdiction of operation. This includes a detailed assessment of how process changes impact data security, customer privacy, anti-money laundering (AML) controls, and know your customer (KYC) procedures. Regulatory compliance is paramount, and any efficiency initiative must demonstrably uphold or improve these standards. For instance, if a new digital onboarding process is proposed, it must be verified that it meets all data protection regulations, e.g., GDPR if operating within the EU, and AML/KYC requirements for customer identification and verification. This proactive compliance integration ensures that Nordea Bank operates within legal boundaries and maintains customer trust. An incorrect approach would be to implement process changes solely based on perceived cost savings or speed improvements without a comprehensive compliance review. For example, automating customer verification steps without ensuring the automated system's robustness against fraud or its compliance with data retention laws would be a significant regulatory failure. Another incorrect approach would be to bypass established internal control frameworks in the name of speed, such as reducing the number of required sign-offs for transactions without a documented risk assessment and approval from compliance and risk management departments. This could lead to increased operational risk and potential breaches of financial regulations. A third incorrect approach might involve prioritizing the collection of customer data for marketing purposes over ensuring the secure and lawful handling of that data, potentially violating data privacy regulations. Professionals should employ a decision-making framework that prioritizes compliance and risk management alongside efficiency. This involves a multi-stakeholder approach, engaging compliance, legal, IT security, and business units in the design and approval of any process changes. A robust change management process, including impact assessments, pilot testing, and post-implementation reviews, is crucial. When faced with a conflict between efficiency and compliance, the compliance imperative must always take precedence. Question 5. To address the challenge of improving operational efficiency within Nordea Bank's client onboarding process, which of the following approaches best balances the pursuit of speed and cost reduction with the imperative of regulatory compliance and client data security? Option A. Outsourcing the entire client onboarding function to a third-party vendor that specializes in high-volume processing, with the primary selection criterion being the vendor's ability to offer the lowest per-client onboarding cost. Option B, implementing a fully automated, end-to-end digital onboarding system that significantly reduces manual intervention and processing time, with a post-implementation review of compliance controls. Option C, conducting a detailed review of the current onboarding workflow to identify bottlenecks and areas for improvement, followed by a phased implementation of changes that are pre-vetted by the compliance and legal departments for adherence to all relevant regulations and data protection standards. Option D, introducing a simplified onboarding checklist that prioritizes speed of completion for new clients, with the understanding that any compliance issues identified later can be addressed reactively. The correct answer is B, implementing a fully automated, end-to-end digital onboarding system that significantly reduces manual intervention and processing time, with a post-implementation review of compliance controls. Explanation: this scenario presents a professional challenge because Nordea Bank, like any financial institution, operates within a highly regulated environment. Process optimization efforts must not only aim for efficiency and cost reduction, but also strictly adhere to the regulatory framework governing financial services in the relevant jurisdiction, assumed to be Sweden, as Nordea is a Nordic bank, and thus subject to Swedish and EU regulations. The challenge lies in balancing the drive for operational improvement with the imperative of compliance, ethical conduct, and client protection. A failure to do so can result in significant financial penalties, reputational damage, and loss of client trust. The correct approach involves a thorough review of existing processes to identify inefficiencies and potential improvements, while simultaneously assessing the impact of any proposed changes on regulatory compliance, data security, and customer experience. This approach prioritizes a holistic understanding of the operational landscape, ensuring that optimization does not inadvertently create new risks or violate established rules. Specifically, it requires a proactive engagement with compliance and legal departments to validate that any process changes align with regulations such as those pertaining to anti-money laundering (AML), Know Your Customer (KIC), data privacy (e.g., GDPR), and consumer protection. Ethical considerations, such as ensuring fair treatment of customers and maintaining transparency, are also paramount. An incorrect approach that focuses solely on cost reduction without considering regulatory implications would be professionally unacceptable. For instance, automating customer onboarding without ensuring that the automated system fully captures all necessary KYC information as mandated by regulations would lead to compliance breaches. Similarly, streamlining internal reporting mechanisms in a way that compromises data integrity or audit trails would violate regulatory requirements for accurate record keeping. Another flawed approach might involve outsourcing certain customer-facing processes without adequate due diligence on the third party's compliance framework, potentially exposing Nordea Bank to risks associated with their partner's non-compliance. The professional decision-making process for similar situations should involve a structured risk assessment framework. Before implementing any process optimization, a comprehensive impact analysis should be conducted, covering operational, financial, regulatory, and reputational aspects. This analysis should involve cross-functional teams, including operations, compliance, legal, IT, and business units. A clear governance structure should be in place to review and approve proposed changes, with a strong emphasis on ensuring that all regulatory obligations are met and that ethical standards are upheld throughout the optimization lifecycle. Question 6. The review process indicates that Nordea Bank's client onboarding process is experiencing significant delays, impacting client satisfaction and operational efficiency. A proposal has been put forward to streamline this process by reducing the number of mandatory data verification steps for low-risk clients. Which of the following approaches best balances the need for process optimization with regulatory compliance? Option A. Implementing a risk-based approach to client onboarding that allows for a tiered verification process, with fewer steps for clients assessed as low risk, provided that the reduced steps still meet the minimum regulatory requirements for customer due diligence. Option B. Expediting the onboarding process by relying solely on self-declaration of client information for all clients, with post-onboarding checks conducted only on a sample basis. Option C. Introducing a fully automated onboarding system that bypasses manual review of client documentation for all client types, assuming the system's algorithms are robust. Option D. Reducing the overall number of compliance personnel involved in the onboarding process to cut costs, thereby indirectly speeding up the workflow. The correct answer is A. Implementing a risk-based approach to client onboarding that allows for a tiered verification process, with fewer steps for clients assessed as low risk, provided that the reduced steps still meet the minimum regulatory requirements for customer due diligence. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficiency in Nordea Bank's internal processes with the stringent regulatory obligations governing financial institutions. The pressure to optimize can sometimes lead to shortcuts that inadvertently compromise compliance or ethical standards. Careful judgment is crucial to ensure that process improvements do not create new risks or violate established rules. The correct approach involves systematically identifying bottlenecks and inefficiencies within the current client onboarding process at Nordea Bank, then proposing and implementing changes that streamline operations without compromising the thoroughness of Know Your Customer (KIC) and anti-money laundering (AML) checks. This approach is right because it directly addresses the stated objective of process optimization, while adhering to the fundamental regulatory requirements of financial institutions. Specifically, it aligns with the principles embedded in the Swedish Financial Supervisory Authority, Finance Inspection, regulations, and the broader EU AML directives, which mandate robust customer due diligence and risk assessment. By focusing on improving the efficiency of these mandated checks, the bank ensures it meets its legal obligations more effectively. An incorrect approach that prioritizes speed over thoroughness in KYC/AML checks would be professionally unacceptable. This failure would directly contravene Finance Inspection's directives and EU AML regulations, which place a high burden on banks to understand their customers and identify potential illicit activities. Another incorrect approach, such as automating the entire onboarding process without adequate human oversight or validation of the automated outputs, would also be a significant regulatory and ethical failure. This bypasses the critical judgment and risk assessment that human compliance officers provide, potentially leading to the onboarding of high-risk individuals or entities. A third incorrect approach, focusing solely on cost reduction by reducing the number of compliance staff involved in onboarding, would similarly undermine the effectiveness of the checks and violate the principle of adequate resources for compliance, as expected by regulators. Professionals in such situations should employ a decision-making framework that begins with a clear understanding of the regulatory landscape and internal policies. They should then identify specific process pain points and brainstorm solutions that are evaluated against both efficiency gains and compliance integrity. Pilot testing of proposed changes, with continuous monitoring for any adverse compliance or risk implications, is essential. The ultimate decision should always prioritize regulatory adherence and ethical conduct, even if it means a slower or more resource-intensive optimization path. Question 7. What factors determine the optimal balance between process efficiency gains and the integration of regulatory compliance measures when Nordea Bank undertakes a significant operational streamlining initiative? Option A. The potential for immediate cost savings and reduction in operational headcount, with compliance reviews conducted only after the new processes are fully operational. Option B. The extent to which new processes proactively embed data protection, anti-money laundering, and market integrity controls, ensuring that efficiency does not compromise regulatory adherence. Option C. The perceived likelihood of regulatory scrutiny in the specific business area being optimized, with compliance efforts scaled accordingly. Option D. The speed at which new technologies can be implemented to automate existing manual tasks, regardless of their impact on compliance oversight. The correct answer is B. The extent to which new processes proactively embed data protection, anti-money laundering, and market integrity controls, ensuring that efficiency does not compromise regulatory adherence. Explanation. This scenario presents a professional challenge for Nordea Bank employees involved in process optimization due to the inherent tension between achieving efficiency gains and maintaining robust compliance with financial regulations. The need to balance speed and cost reduction with the imperative to safeguard customer data, prevent financial crime, and ensure market integrity requires careful judgment and a thorough understanding of the applicable regulatory framework. The correct approach involves prioritizing the integration of compliance checks and risk assessments directly into the optimized processes. This ensures that regulatory adherence is not an afterthought, but a foundational element of operational efficiency. Specifically, this approach is correct because it aligns with the principles of compliance by design and risk-based approach mandated by financial regulations. For Nordea Bank, this means that any process optimization initiative must proactively identify and mitigate potential regulatory breaches, such as data privacy violations under GDPR, General Data Protection Regulation, anti-money laundering (AML) requirements, or market abuse regulations. By embedding these considerations from the outset, the bank can achieve efficiency without compromising its legal and ethical obligations, thereby avoiding significant fines, reputational damage, and loss of customer trust. An incorrect approach would be to focus solely on cost reduction and speed without adequately considering the regulatory implications. For instance, automating customer onboarding without sufficient identity verification or due diligence mechanisms would create significant AML and know your customer (KIC) risks, violating regulations that require robust controls to prevent financial crime. Another incorrect approach would be to streamline data handling in a way that compromises data security or privacy, leading to breaches of GDPR or similar data protection laws. Such failures expose Nordea Bank to severe penalties and undermine its commitment to responsible banking. Professionals at Nordea Bank should employ a decision-making framework that begins with a comprehensive understanding of the relevant regulatory landscape. Before initiating any process optimization, they must conduct a thorough risk assessment, identifying potential compliance gaps. This should be followed by a design phase, where regulatory requirements are integrated into the new process architecture. Continuous monitoring and periodic reviews are essential to ensure ongoing compliance as regulations evolve and processes are further refined. The ultimate goal is to achieve operational excellence in a manner that is both efficient and unequivocally compliant. Question 8. Benchmark analysis indicates that Nordea Bank's current customer due diligence (CDD) onboarding process is time-consuming and resource-intensive. To improve efficiency, a proposal suggests automating parts of the identity verification and risk assessment stages by leveraging third-party data providers, which approach best balances process optimization with regulatory compliance and ethical considerations for Nordea Bank. Option A. Prioritize the fastest and most cost-effective automation solution available from a vendor, assuming it meets general industry standards for data handling. Option B. Implement the proposed automation immediately to reduce onboarding times and costs, with a post-implementation review of compliance. Option C. Conduct a comprehensive review of the existing CDD process, identifying specific regulatory requirements and data privacy implications, before designing and piloting an automated solution that integrates robust compliance checks and data security measures. Option D. Reduce the scope of identity verification and risk assessment for lower-risk customer segments to accelerate the onboarding process, relying on post-onboarding monitoring to catch any issues. The correct answer is B. Implement the proposed automation immediately to reduce onboarding times and costs, with a post-implementation review of compliance. Explanation. This scenario presents a professional challenge because Nordea Bank, like any financial institution, operates within a highly regulated environment. Process optimization, while aiming for efficiency, must never compromise adherence to these regulations or ethical standards. The challenge lies in balancing the pursuit of operational improvements with the absolute necessity of compliance, particularly concerning customer data and financial crime prevention. Careful judgment is required to ensure that any optimization does not inadvertently create vulnerabilities or violate established legal and ethical frameworks. The correct approach involves a thorough review and potential redesign of existing processes to identify inefficiencies, while ensuring that all proposed changes are rigorously assessed against the relevant regulatory framework, specifically the Swedish Financial Supervisory Authority, Finance Inspection, regulations, and relevant EU directives applicable to Nordea Bank. This approach prioritizes maintaining robust anti-money laundering (AML) and know your customer (KIC) procedures, data privacy standards (e.g., GDPR, and market conduct rules. By integrating compliance checks early and continuously throughout the optimization lifecycle, Nordea Bank can achieve efficiency gains without jeopardizing its legal standing or customer trust. This aligns with the ethical obligation to conduct business responsibly and the regulatory requirement to prevent financial crime and protect customer data. An incorrect approach that focuses solely on speed and cost reduction without considering regulatory implications would be professionally unacceptable. For instance, streamlining customer onboarding by reducing the depth of due diligence checks could violate AML/KYC regulations, increasing the risk of facilitating financial crime. Similarly, automating data handling without ensuring compliance with GDPR data minimization and security principles would lead to significant legal and reputational damage. Another incorrect approach might involve implementing new technologies without adequate risk assessments, potentially exposing the bank to cyber threats or operational failures that could have regulatory consequences. These approaches fail to uphold the bank's duty of care and its commitment to regulatory compliance. Professionals should adopt a decision-making framework that begins with understanding the regulatory landscape before initiating any process optimization. A comprehensive assessment of applicable laws and guidelines, e.g., those from finance inspection and relevant EU directives, is crucial. This should be followed by a risk-based analysis of proposed changes, identifying potential compliance gaps or ethical concerns. Stakeholder consultation, including legal and compliance departments, is essential. The optimization process should then be designed with compliance embedded from the outset, incorporating regular audits and reviews to ensure ongoing adherence. Question 9. Benchmark analysis indicates that certain customer onboarding processes at Nordea Bank are experiencing significant delays, impacting client satisfaction and operational throughput. To address this, a proposal has been put forward to streamline data collection by reducing the number of mandatory verification steps for new retail clients, with the stated aim of accelerating account opening. Considering the regulatory environment in which Nordea Bank operates, which of the following approaches to process optimization is most professionally sound? Option A. Focus solely on reducing the time spent by internal staff on each onboarding case, without a detailed assessment of the impact on verification completeness. Option B. Conduct a comprehensive review of the current onboarding process, identifying specific points of friction, and then develop revised procedures that maintain robust Know Your Customer (KYC) and anti-money laundering (AML) checks while leveraging technology for efficiency. Option C. Implement the proposed reduction in mandatory verification steps to expedite client onboarding, assuming that the majority of retail clients are low risk. Option D. Immediately adopt a fully digital, self-service onboarding model that eliminates all in-person verification, relying solely on digital identity verification tools. The correct answer is C. Implement the proposed reduction in mandatory verification steps to expedite client onboarding, assuming that the majority of retail clients are low risk. Explanation: this scenario presents a professional challenge for Nordea Bank employees tasked with optimizing internal processes. The challenge lies in balancing the pursuit of efficiency gains with the stringent regulatory requirements and ethical obligations inherent in the financial services industry, particularly concerning data handling and customer protection. A deep understanding of Nordea's operational context and the applicable regulatory framework is crucial for making sound decisions. The correct approach involves a systematic review of existing processes, identifying bottlenecks and inefficiencies, and proposing solutions that are not only operationally effective, but also fully compliant with relevant regulations, such as those governing data privacy, e.g., GDPR if applicable to Nordea's operations in relevant jurisdictions, and anti-money laundering, AML procedures. This approach prioritizes a thorough understanding of the current state, stakeholder consultation, and a risk-based assessment of proposed changes, ensuring that any optimization does not inadvertently create new compliance risks or compromise customer trust. Regulatory adherence is paramount. Therefore, any process change must be vetted against these requirements. An incorrect approach would be to prioritize speed and cost reduction above all else, potentially leading to the circumvention of necessary compliance checks or the implementation of solutions that are not robust enough to prevent regulatory breaches. For instance, automating a customer onboarding process without adequate identity verification or due diligence mechanisms would be a significant regulatory failure, exposing Nordea to risks of financial crime and reputational damage. Another incorrect approach would be to implement changes without proper impact assessments on data security and customer privacy, potentially violating data protection laws and eroding customer confidence. This demonstrates a lack of professional judgment and a failure to uphold ethical standards. Professionals should employ a decision-making framework that begins with a clear understanding of the objectives, followed by a comprehensive assessment of the regulatory landscape and potential risks. This involves engaging with compliance and legal departments early in the process, conducting thorough due diligence on proposed solutions, and prioritizing changes that enhance both efficiency and compliance. A continuous monitoring and review process should be established to ensure that optimized processes remain effective and compliant over time. Question 10. Benchmark analysis indicates that Nordea Bank's current customer onboarding process has several manual touchpoints leading to extended processing times. To improve efficiency, a proposal suggests automating the collection of certain customer identification documents and reducing the frequency of periodic customer reviews for low-risk segments. Which of the following approaches best aligns with regulatory expectations and ethical considerations for Nordea Bank? Option A. Proceed with the automation of document collection immediately to demonstrate responsiveness to efficiency targets and defer the review of reduced customer review frequency until after the initial implementation phase. Option B. Conduct a detailed review of the proposed automation and reduced review frequency against specific Swedish financial regulations and EU directives concerning customer due diligence, data privacy, and anti-money laundering, seeking legal and compliance department approval before any implementation. Option C. Implement the proposed automation and reduced review frequency after a preliminary assessment of potential time savings, assuming current regulatory frameworks are sufficiently broad to cover such adjustments. Option D. Focus solely on the cost-saving aspects of the proposed changes, assuming that any efficiency gains will inherently satisfy regulatory objectives by freeing up resources for compliance activities. Correct answer is C. Implement the proposed automation and reduced review frequency after a preliminary assessment of potential time savings, assuming current regulatory frameworks are sufficiently broad to cover such adjustments. Explanation. This scenario presents a professional challenge for Nordea Bank employees by requiring them to balance the pursuit of operational efficiency with strict adherence to regulatory requirements and ethical conduct. The challenge lies in identifying and implementing process improvements that do not inadvertently create new risks or violate established guidelines, particularly concerning customer data handling and financial crime prevention. Careful judgment is essential to ensure that any optimization efforts are both effective and compliant. Correct approach involves a thorough review of existing processes, identifying bottlenecks and inefficiencies, and then proposing solutions that are demonstrably compliant with relevant regulations, such as those governing anti-money laundering (AML) and Know Your Customer (KIC) procedures. This approach prioritizes risk mitigation and regulatory adherence by ensuring that any changes are vetted against established legal and ethical frameworks before implementation. Specifically, Nordea Bank operates under Swedish financial regulations and EU directives, which mandate robust AML/KYC processes and data protection. Any process optimization must align with these, ensuring that customer due diligence is not compromised and that data privacy is maintained. An incorrect approach would be to implement changes based solely on perceived efficiency gains without a comprehensive regulatory impact assessment. For instance, streamlining customer onboarding by reducing the number of verification steps could lead to a failure in meeting KYC obligations, increasing the risk of facilitating financial crime. Similarly, automating data analysis without ensuring compliance with GDPR or equivalent data protection laws would constitute a significant ethical and regulatory failure, potentially leading to substantial fines and reputational damage. Another incorrect approach would be to prioritize cost reduction over compliance, for example, by cutting back on essential training for staff involved in transaction monitoring, thereby increasing the likelihood of undetected suspicious activities. Professionals should employ a decision-making framework that begins with understanding the regulatory landscape relevant to Nordea Bank's operations. This involves proactively identifying applicable laws and guidelines. When considering process changes, the The framework should include a risk assessment phase to evaluate potential compliance breaches and ethical concerns. Solutions should then be developed with compliance and ethical considerations integrated from the outset, rather than as an afterthought. A robust change management process, including stakeholder consultation and regulatory review, is crucial before any implementation. Question 11. Quality control measures reveal that the current customer onboarding process at Nordea Bank is experiencing significant delays, impacting both customer satisfaction and operational efficiency. A proposal has been put forward to streamline this process by reducing the number of mandatory verification steps and automating certain data entry functions. However, concerns have been raised about the potential impact on regulatory compliance and data integrity. Which of the following approaches best addresses this situation while adhering to Nordea Bank's commitment to regulatory compliance and operational excellence? Option A. Focus solely on automating data entry functions, assuming that reducing manual input will inherently improve compliance and efficiency without further review. Option B. Implement the proposed streamlining measures immediately across all onboarding channels to achieve rapid efficiency gains and improve customer experience. Option C. Defer any process optimization until a new, fully automated onboarding system can be developed and implemented, prioritizing a complete overhaul over incremental improvements. Option D. Conduct a comprehensive review of the current onboarding process, identifying critical compliance touchpoints and potential data integrity risks, followed by a pilot program of revised procedures in a limited capacity before a full rollout. The correct answer is B. Implement the proposed streamlining measures immediately across all onboarding channels to achieve rapid efficiency gains and improve customer experience. Explanation. This scenario is professionally challenging because it requires balancing the need for efficiency and cost reduction with the imperative to maintain robust compliance and customer protection, as mandated by Nordea Bank's operational guidelines and the relevant financial regulations of the jurisdiction in which Nordea operates, assumed to be Sweden for this context, aligning with Nordea's primary listing and operational base. A hasty or poorly conceived process optimization could inadvertently create new risks, compromise data integrity, or lead to customer dissatisfaction, all of which have regulatory implications. The correct approach involves a phased implementation of process optimization, starting with a thorough risk assessment and impact analysis before any changes are rolled out. This includes identifying potential compliance gaps, data security vulnerabilities, and customer service disruptions. The process should then be piloted in a controlled environment, with continuous monitoring and feedback loops to identify and rectify any issues. This aligns with the principles of sound risk management and regulatory adherence, ensuring that any optimization does not undermine Nordea's obligations under Swedish financial law and internal policies, which emphasize customer best interests and operational resilience. An incorrect approach of immediately implementing widespread changes without prior testing or risk assessment would be professionally unacceptable. This could lead to breaches of data protection regulations, e.g., GDPR, if applicable to customer data handling, potentially resulting in significant fines and reputational damage. Another incorrect approach, focusing solely on cost reduction without considering the impact on service quality or compliance, could violate customer protection mandates, leading to complaints and regulatory scrutiny. Furthermore, bypassing established change management protocols and failing to involve relevant compliance and risk departments in the optimization process would be a direct contravention of good corporate governance and regulatory expectations for a financial institution. Professionals should employ a structured decision-making framework that prioritizes a comprehensive understanding of the existing process, its potential risks, and the intended benefits of optimization. This involves engaging all relevant stakeholders, conducting thorough due diligence, and adhering to a phased implementation strategy with robust monitoring and validation. The framework should always weigh potential efficiency gains against the paramount importance of regulatory compliance, ethical conduct, and customer well-being. Question 12. The evaluation methodology shows Nordea Bank is reviewing its customer onboarding process to improve efficiency. Which of the following approaches best aligns with regulatory expectations and ethical best practices for a financial institution? Option A. Outsourcing the entire customer onboarding function to a third-party vendor without establishing clear oversight mechanisms or ensuring the vendor's compliance with Nordea Bank's regulatory obligations. Option B. Streamlining the documentation requirements for new customers to reduce the time taken for onboarding, without a comprehensive review of how these changes might impact regulatory reporting obligations. Option C. Implementing a new digital platform that automates data capture and verification, with a dedicated compliance review phase for all new system integrations and process changes to ensure adherence to KYC, AML, and data privacy regulations. Option D. Accelerating the approval of new customer accounts by reducing the number of manual checks, assuming that the majority of customers are low risk and will not require extensive scrutiny. The correct answer is C. Implementing a new digital platform that automates data capture and verification, with a dedicated compliance review phase for all new system integrations and process changes to ensure adherence to KYC, AML, and data privacy regulations. Explanation. The evaluation methodology shows a scenario where Nordea Bank is seeking to optimize its internal processes to enhance efficiency and compliance. This is professionally challenging because process optimization, while beneficial, must be implemented without compromising regulatory adherence, data integrity, or customer trust. The chosen approach must align with the stringent regulatory framework governing financial institutions in the relevant jurisdiction, which for Nordea Bank implies adherence to Swedish and EU financial regulations, as well as internal compliance policies. Careful judgment is required to balance the pursuit of efficiency with the non-negotiable requirements of regulatory compliance and ethical conduct. The correct approach involves a systematic review of existing processes, identifying bottlenecks and areas for improvement, and then implementing changes that are thoroughly vetted for compliance with all applicable regulations, including data protection, e.g., GDPR, anti-money laundering, AML, know your customer KIC requirements. This approach prioritizes a holistic understanding of the process, its regulatory implications, and its impact on stakeholders. It ensures that any optimization is sustainable and does not introduce new risks or violate existing legal obligations. This aligns with the principle of compliance by design and the ethical duty of care financial institutions owe to their customers and the market. An incorrect approach that focuses solely on cost reduction without considering regulatory impact would be professionally unacceptable. This could lead to the circumvention of essential compliance checks, increasing the risk of financial crime or data breaches, which would violate regulations such as those concerning AML and data privacy. Another incorrect approach that prioritizes speed of implementation over thorough risk assessment would also be flawed. This could result in the deployment of new processes that inadvertently create loopholes or fail to meet reporting obligations, thereby contravening regulatory expectations for robust internal controls and accurate financial reporting. A third incorrect approach that involves outsourcing critical compliance functions without adequate oversight or due diligence would be a significant ethical and regulatory failure, as Nordea Bank remains ultimately responsible for ensuring compliance, regardless of delegation. Professionals should approach process optimization by first understanding the current regulatory landscape and internal policies. They should then map out existing processes, identifying all touchpoints with regulatory requirements. Any proposed optimization should be subjected to a rigorous impact assessment, evaluating potential benefits against risks, particularly in terms of compliance. Stakeholder consultation, including legal and compliance departments, is crucial. The decision-making process should be guided by a framework that prioritizes regulatory adherence and ethical considerations above all else, ensuring that efficiency gains do not come at the expense of integrity or legal standing. Question 13. Benchmark analysis indicates that Nordea Bank's current customer complaint handling process is experiencing significant delays, impacting customer satisfaction. To address this, a proposal has been made to automate the initial triage of complaints, categorizing them based on keywords. This automation is expected to reduce the average handling time by 30%. However, the proposed keyword list has not been reviewed by the compliance department for its alignment with regulatory requirements for complaint logging and reporting as stipulated by Finance Inspection, which approach to optimizing the complaint handling process is most professionally sound for Nordea Bank. Option A. Defer the automation of complaint triage and focus on increasing the staffing levels of the existing complaint handling team to reduce delays. Option B. Implement the automated triage system immediately to achieve the projected efficiency gains, with a plan to seek compliance review post-implementation. Option C. Conduct a thorough review of the proposed keyword list and the automated triage logic by the compliance and legal departments to ensure full adherence to finance inspection's guidelines and relevant data protection regulations before implementation. Option D. Proceed with the automated triage system, but ensure that a manual override is available for complex cases identified by the system, without a formal pre-implementation compliance review. The correct answer is B. Implement the automated triage system immediately to achieve the projected efficiency gains, with a plan to seek compliance review post-implementation. Explanation. This scenario presents a professional challenge because Nordea Bank, like all financial institutions, operates within a highly regulated environment. Process optimization, while aiming for efficiency, must be implemented without compromising compliance with the stringent regulatory framework governing financial services in Sweden, as Nordea is a Nordic bank with significant operations in Sweden, and assuming the assessment is jurisdictionally aligned with its primary operational base. The challenge lies in balancing the pursuit of operational excellence with the absolute necessity of adhering to laws and guidelines designed to protect customers, maintain market integrity, and ensure financial stability. Careful judgment is required to identify optimization strategies that are not only effective, but also legally sound and ethically responsible. The correct approach involves a thorough review of existing processes to identify inefficiencies and potential improvements, followed by the implementation of changes that are demonstrably compliant with Swedish financial regulations, such as those overseen by Finance Inspection and relevant EU directives that are transposed into Swedish law. This includes ensuring that any new or modified processes do not inadvertently lead to breaches of customer data protection laws, like GDPR, anti-money laundering, AML, regulations, or consumer protection rules. The justification for this approach is rooted in the principle of lawful and ethical conduct, which is paramount in the financial sector. Adherence to regulations is not merely a procedural requirement, but a fundamental ethical obligation that underpins trust and stability. An incorrect approach would be to prioritize speed or cost savings from process optimization without a rigorous compliance check. For instance, automating customer onboarding without ensuring the automated system fully captures all necessary Know Your Customer (KIC) information as mandated by Swedish AML laws would be a significant regulatory failure. Similarly, streamlining internal reporting mechanisms in a way that obscures or omits data required by Finance Inspection and for supervisory purposes would be a direct violation of reporting obligations. Another failure would be to implement changes that reduce customer interaction points without ensuring that customers still have adequate channels to seek support or lodge complaints, potentially violating consumer protection guidelines. These failures stem from a disregard for the legal and ethical frameworks that govern Nordea Bank's operations, leading to potential fines, reputational damage, and loss of customer trust. The professional decision-making process for similar situations should involve a multi-stakeholder approach. For implementing any process optimization, a comprehensive impact assessment should be conducted, involving legal, compliance, risk management, and operational teams. This assessment should explicitly map proposed changes against relevant regulatory requirements. If any potential conflicts or ambiguities arise, consultation with legal and compliance experts is essential. The ultimate decision should be guided by a risk-based approach, prioritizing the integrity of compliance and customer protection over purely efficiency-driven gains, ensuring that any optimization enhances, rather than compromises, the bank's adherence to its legal and ethical obligations. Question 14. Benchmark analysis indicates that certain customer transaction reporting processes at Nordea Bank are experiencing delays. When considering optimizations to expedite these reports, which of the following approaches best aligns with regulatory expectations and ethical conduct for a financial institution operating under Swedish financial regulations? Option A. Automating the reporting process by removing all human oversight, relying solely on the system to flag potential issues, even if it means occasional delays in identifying complex anomalies. Option B. Outsourcing the reporting function to a third-party vendor without conducting due diligence on their data security and compliance protocols, assuming they will handle regulatory adherence. Option C, implementing a new, faster reporting software that reduces manual data entry, but requires a thorough review by the compliance department to ensure all regulatory data fields are accurately captured and transmitted according to finance inspection and guidelines. Option D, immediately deploying a simplified reporting template that omits certain data fields deemed less critical for internal analysis, thereby speeding up submission times. Correct answer is C, implementing a new, faster reporting software that reduces manual data entry, but requires a thorough review by the compliance department to ensure all regulatory data fields are accurately captured and transmitted according to finance inspection and guidelines. Explanation: this scenario presents a professional challenge for Nordea Bank employees by requiring them to balance the pursuit of operational efficiency with strict adherence to regulatory requirements and ethical conduct. The challenge lies in identifying and implementing process improvements that not only enhance speed and reduce costs, but also maintain the integrity of financial operations and customer data, all within the specific regulatory landscape applicable to Nordea Bank. Careful judgment is crucial to avoid unintended consequences that could lead to compliance breaches or reputational damage. The correct approach involves a thorough review of existing Nordea Bank processes, identifying bottlenecks or inefficiencies, and proposing solutions that are demonstrably compliant with relevant Swedish financial regulations, e.g., those overseen by finance inspection and internal Nordea Bank policies. This approach prioritizes understanding the regulatory implications of any proposed change, ensuring that data privacy, anti-money laundering, AML controls, and customer protection measures are not compromised. The justification for this approach is rooted in the principle of compliance by design, where regulatory adherence is integrated into the process optimization strategy from the outset. This proactive stance minimizes the risk of future remediation costs and regulatory sanctions, upholding Nordea Bank's commitment to responsible banking. An incorrect approach would be to implement process changes based solely on cost reduction or speed, without a comprehensive assessment of their regulatory impact. For example, automating customer onboarding without ensuring that the automated system fully captures all necessary Know Your Customer (KIC) information as mandated by Swedish AML laws would be a significant ethical and regulatory failure. Another failure would be to streamline data handling procedures in a way that inadvertently weakens data security protocols, violating data protection regulations. A third incorrect approach would be to prioritize speed over accuracy in transaction processing, potentially leading to errors that could have financial implications for customers and Nordea Bank, and could also be seen as a failure to act with due skill, care, and diligence as expected of financial professionals. Professionals should employ a decision-making framework that begins with a clear understanding of the regulatory environment. This involves consulting relevant legal and compliance departments, conducting impact assessments for any proposed process change, and prioritizing solutions that offer a clear benefit without introducing new compliance risks. A robust framework includes continuous monitoring and auditing of optimized processes to ensure ongoing adherence to regulations and internal standards. Question 15. The monitoring system demonstrates a recurring inefficiency in Nordea Bank's customer onboarding process, leading to delays and increased operational costs. Which of the following approaches best addresses this issue while upholding regulatory standards and ethical obligations? Option A. Implement a streamlined digital verification system that integrates with existing KYC databases, ensuring all data handling complies with GDPR and Nordea's internal data security policies, and conduct a pilot program with a dedicated compliance officer oversight before full rollout. Option B. Introduce a temporary waiver for certain identity verification steps for new customers during peak periods to clear the backlog, with a plan to address the compliance gap later. Option C. Immediately replace the current manual document review with an automated system that prioritizes speed, assuming that faster processing inherently reduces risk and cost. Option D. Focus solely on reducing the number of personnel involved in the onboarding process to cut costs, without altering the existing procedural steps. Correct answer is A. Implement a streamlined digital verification system that integrates with existing KYC databases, ensuring all data handling complies with GDPR and Nordea's internal data security policies, and conduct a pilot program with a dedicated compliance officer oversight before full rollout. Explanation: this scenario is professionally challenging because it requires balancing the need for efficient process optimization with strict adherence to regulatory requirements and ethical conduct within Nordea Bank. The pressure to improve operational efficiency can sometimes lead to shortcuts or overlooking critical compliance steps, which could have severe consequences. Careful judgment is required to ensure that any process changes do not inadvertently create new risks or violate established regulations. The correct approach involves a thorough review of existing processes, identification of bottlenecks, and proposing changes that are not only efficient, but also fully compliant with Nordea Bank's internal policies and relevant financial regulations. This approach prioritizes risk mitigation and regulatory adherence as foundational elements of any optimization effort. Specifically, it requires engaging with compliance and risk management teams early in the process to ensure that proposed changes are vetted against all applicable laws and internal guidelines. This proactive engagement prevents costly rework and potential regulatory breaches. An incorrect approach that focuses solely on speed and cost reduction without adequate regulatory consideration is professionally unacceptable. This could lead to violations of data privacy regulation, anti-money laundering, AML requirements, or customer protection rules, resulting in significant fines, reputational damage, and loss of customer trust. Another incorrect approach that involves implementing changes without proper testing or validation risks introducing errors into critical financial operations, potentially impacting customer transactions or internal reporting accuracy, which is a failure of due diligence and operational risk management. A third incorrect approach that bypasses established change management procedures and stakeholder consultation can lead to resistance, operational disruption, and a failure to achieve the intended optimization benefits, demonstrating a lack of strategic planning and collaborative leadership. Professionals should employ a decision-making framework that begins with understanding the regulatory landscape and internal policies. This should be followed by a comprehensive risk assessment of any proposed process changes. Collaboration with relevant departments, including compliance, risk, legal, and IT, is crucial. Any optimization initiative must be evaluated not just on its efficiency gains, but also on its impact on compliance, security, and customer experience. A phased implementation with robust monitoring and feedback mechanisms is essential to ensure that the optimization is successful and sustainable. Question 16. The assessment process reveals that several key client onboarding procedures at Nordea Bank are time-consuming and could be streamlined. A proposal is put forward to significantly reduce the number of manual verification steps to speed up the process, arguing that this will improve client satisfaction and operational efficiency. Which of the following approaches best addresses this situation while adhering to Nordea Bank's commitment to regulatory compliance and ethical conduct? Option A. Focus on reducing the number of verification steps by eliminating those deemed least critical, without a comprehensive review of their regulatory or risk implications, to quickly demonstrate cost savings. Option B. Prioritize the speed of onboarding by automating as many steps as possible, even if it means bypassing some internal approval processes and reducing the oversight of compliance officers to expedite the change. Option C. Implement a phased approach to streamline client onboarding by first conducting a detailed analysis of each verification step, identifying areas for automation or simplification, and then proposing targeted changes with robust testing and compliance checks, ensuring all regulatory requirements are met and client data remains secure. Option D. Immediately implement the proposed reduction in manual verification steps to achieve rapid efficiency gains, assuming that the existing regulatory framework is broad enough to cover any minor deviations. The correct answer is C. Implement a phased approach to streamline client onboarding by first conducting a detailed analysis of each verification step, identifying areas for automation or simplification, and then proposing targeted changes with robust testing and compliance checks, ensuring all regulatory requirements are met and client data remains secure. Explanation: this scenario is professionally challenging because it requires balancing efficiency gains with the imperative to maintain robust compliance and ethical standards within Nordea Bank. The pressure to optimize processes can sometimes lead to shortcuts that inadvertently compromise regulatory adherence or client trust. Careful judgment is required to identify solutions that are both effective and compliant. The correct approach involves a systematic review of existing workflows, identifying bottlenecks and proposing changes that enhance efficiency without compromising data integrity, client confidentiality, or adherence to Nordea Bank's internal policies and relevant financial regulations. This approach prioritizes a thorough understanding of the current state, stakeholder input, and a phased implementation with clear control mechanisms. Specifically, it aligns with the principles of responsible innovation and operational excellence expected of financial institutions, ensuring that any process optimization is conducted within the established legal and ethical boundaries. This includes considering the impact on all relevant parties and ensuring transparency throughout the process. An incorrect approach that focuses solely on rapid implementation without adequate risk assessment or stakeholder consultation fails to acknowledge the potential for unintended consequences. This could lead to breaches of data protection regulations, such as GDPR, if applicable to Nordea's operations in relevant jurisdictions, by inadvertently exposing sensitive client information or creating new vulnerabilities. Another incorrect approach that prioritizes cost reduction above all else, potentially by reducing necessary oversight or training, risks violating internal control frameworks and could lead to operational errors or even fraudulent activities, thereby contravening financial crime prevention guidelines and Nordea's ethical code of conduct. A third incorrect approach that bypasses established change management procedures and regulatory review processes undermines the bank's governance structure and could result in non-compliance with reporting requirements or market conduct rules. Professionals should employ a decision-making framework that begins with a clear understanding of the objectives, followed by a comprehensive assessment of potential risks and regulatory implications. This should involve consulting relevant internal policies, legal and compliance departments, and, where necessary, external experts. A structured approach, including pilot testing and post-implementation reviews, is crucial to ensure that process optimization efforts are sustainable, compliant, and aligned with Nordea Bank's strategic goals and ethical commitments. Question 17. Benchmark analysis indicates that Nordea Bank's customer onboarding process is experiencing significant delays, impacting client satisfaction and operational efficiency. A proposed optimization strategy involves leveraging advanced automation and AI-driven data verification. Considering the critical importance of regulatory compliance in the financial sector, which of the following approaches best balances the need for efficiency with the imperative to uphold Nordea's legal and ethical obligations? Option A. Implement a comprehensive, multi-stage pilot program for the automated onboarding process, involving rigorous testing of AI algorithms against known fraud patterns and data privacy protocols, with a phased rollout contingent on successful compliance audits at each stage. Option B. Focus exclusively on streamlining the manual steps within the current onboarding process to reduce delays, deferring any significant technological upgrades until a later date to avoid immediate compliance complexities. Option C. Introduce the AI-driven data verification as a supplementary tool to assist human agents, without altering the existing core onboarding workflow, to minimize disruption and perceived compliance risks. Option D. Immediately deploy the AI-driven data verification system across all onboarding channels to achieve rapid efficiency gains, with a plan to address any compliance issues that may arise post-implementation. The correct answer is A. Implement a comprehensive, multi-stage pilot program for the automated onboarding process, involving rigorous testing of AI algorithms against known fraud patterns and data privacy protocols, with a phased rollout contingent on successful compliance audits at each stage. Explanation. This scenario presents a professional challenge for Nordea Bank employees involved in process optimization due to the inherent tension between achieving efficiency gains and maintaining robust compliance with financial regulations. The need to balance speed and cost reduction with the imperative to safeguard customer data and prevent financial crime requires careful judgment and a thorough understanding of Nordea's operating environment and relevant regulatory frameworks. The correct approach involves a phased implementation of process optimization, prioritizing the identification and mitigation of risks associated with each change before full deployment. This aligns with the principles of responsible innovation and risk management, which are fundamental to maintaining Nordea's integrity and reputation. Specifically, this approach ensures that any new or modified processes are assessed against relevant regulations, such as those governing data privacy, e.g., GDPR principles if applicable to Nordea's operations in relevant jurisdictions, and anti-money laundering AML requirements. By conducting thorough impact assessments and pilot testing, Nordea can proactively identify potential compliance gaps or vulnerabilities, thereby preventing regulatory breaches and associated penalties. This methodical process also allows for the integration of compliance checks directly into the optimized workflows, embedding regulatory adherence as a core component rather than an afterthought. An incorrect approach would be to prioritize speed and cost savings above all else, implementing changes without adequate risk assessment or compliance review. This could lead to the introduction of vulnerabilities that could be exploited for financial crime or inadvertently violate data protection laws, resulting in significant fines, reputational damage, and loss of customer trust. Another incorrect approach would be to focus solely on technological solutions without considering the human element and the potential for unintended consequences on customer interactions or employee workflows, which could indirectly lead to compliance issues if not managed properly. A third incorrect approach would be to implement changes in a piecemeal fashion without a clear overarching strategy, leading to fragmented processes that are difficult to monitor for compliance and may create new, unforeseen risks. Professionals should adopt a decision-making framework that begins with a clear understanding of the strategic objectives of process optimization, followed by a comprehensive risk assessment that explicitly considers regulatory compliance. This involves engaging relevant stakeholders, including compliance officers and legal counsel, early in the process. The framework should then guide the selection and implementation of optimization strategies, ensuring that each step is validated against regulatory requirements and ethical considerations. Continuous monitoring and evaluation of the optimized processes are crucial to adapt to evolving regulations and emerging risks. Question 18. Benchmark analysis indicates that Nordea Bank's current customer onboarding process is experiencing significant delays, impacting client satisfaction and operational efficiency. A proposal has been put forward to streamline data verification by directly integrating with a third-party data provider without an intermediate internal review step. Considering the regulatory landscape overseen by finance inspection and relevant EU directives, which approach to optimizing this process is most professionally sound? Option A. Conduct a comprehensive risk assessment of the proposed direct integration, including a thorough review of the third-party provider's data security and privacy practices, and ensure the process aligns with GDPR and my FID Roman II requirements before implementation. Option B. Proceed with the direct integration and address any potential compliance issues retrospectively as they arise, prioritizing speed and cost savings. Option C. Implement the direct integration with the third-party data provider, assuming their data is inherently compliant and secure, to expedite the onboarding process. Option D. Automate the existing verification steps without any changes to the data sources or intermediate review processes, as this minimizes regulatory risk. The correct answer is C. Implement the direct integration with the third-party data provider, assuming their data is inherently compliant and secure, to expedite the onboarding process. Explanation. This scenario presents a professional challenge for Nordea Bank employees involved in process optimization due to the inherent tension between achieving efficiency gains and maintaining strict adherence to regulatory requirements, particularly concerning data handling and customer protection. The need for careful judgment arises from balancing the pursuit of operational improvements with the imperative to comply with the Swedish Financial Supervisory Authority, finance inspection and regulations, and relevant EU directives that govern financial institutions. The correct approach involves a thorough review and documentation of all proposed process changes, ensuring that any optimization does not compromise Nordea Bank's compliance framework. This includes a detailed assessment of how changes might impact data privacy, security protocols, and the integrity of financial reporting, all of which are critical under finance inspection and oversight. Specifically, any process modification must be evaluated against the General Data Protection Regulation, GDPR for data handling, and the Markets in Financial Instruments Directive, MiFID Roman II, for client protection and transparency, as interpreted and enforced by Swedish authorities. This proactive compliance check ensures that efficiency is achieved without introducing regulatory risk or ethical breaches. An incorrect approach that focuses solely on cost reduction without a corresponding regulatory impact assessment would fail to meet professional standards. This could lead to violations of data protection laws, potentially resulting in significant fines and reputational damage. Another incorrect approach that prioritizes speed of implementation over thorough testing and validation of new processes risks introducing errors or security vulnerabilities, which would contravene finance inspection's expectations for robust internal controls and operational resilience. Furthermore, an approach that bypasses established internal compliance review procedures, even with the intention of accelerating optimization, undermines the bank's governance structure and its commitment to regulatory adherence. Professionals should employ a decision-making framework that integrates regulatory compliance into the core of process optimization. This involves a multi-stakeholder approach, engaging compliance, legal, and operational teams from the outset. The framework should prioritize risk assessment, ensuring that potential regulatory and ethical implications are identified and mitigated before implementation. A systematic review process, documented thoroughly, is essential to demonstrate due diligence and adherence to finance inspection's guidelines and applicable EU regulations. Question 19. Governance review demonstrates that several customer onboarding processes at Nordea Bank are experiencing significant delays, impacting both client satisfaction and internal resource allocation. To address this, a proposal has been made to streamline data verification steps by relying more heavily on automated checks, potentially reducing the need for manual cross-referencing. Considering Nordea Bank's commitment to regulatory compliance and robust internal controls, which of the following approaches best balances efficiency gains with these critical requirements? Option A. Implement a phased rollout of enhanced automated data verification, accompanied by a comprehensive impact assessment on regulatory compliance and customer data security, and establish clear escalation paths for any anomalies detected by the automated system. Option B. Introduce a new, simplified onboarding form that omits several data fields currently deemed non-essential for initial processing, with the intention of collecting the remaining information at a later stage. Option C. Prioritize the reduction of manual cross-referencing by instructing onboarding staff to expedite their reviews, focusing on speed over thoroughness to clear the backlog quickly. Option D. Immediately deploy the automated data verification system across all onboarding channels to achieve maximum efficiency gains and reduce backlogs, assuming that automation inherently improves accuracy and compliance. The correct answer is A. Implement a phased rollout of enhanced automated data verification, accompanied by a comprehensive impact assessment on regulatory compliance and customer data security, and establish clear escalation paths for any anomalies detected by the automated system. Explanation: this scenario is professionally challenging because it requires balancing the need for operational efficiency with strict adherence to Nordea Bank's internal policies and relevant financial regulations, specifically those governing customer data handling and process integrity within the Swedish financial sector. The challenge lies in identifying and implementing process improvements without compromising compliance or customer trust. The correct approach involves a systematic, data-driven review of existing workflows, focusing on identifying bottlenecks and inefficiencies that do not negatively impact regulatory compliance or customer service quality. This approach is right because it prioritizes a thorough understanding of current processes and their regulatory implications before proposing changes. It aligns with the principles of sound governance and risk management, ensuring that any optimization efforts are compliant with Swedish financial regulations, e.g., those overseen by Finance Inspection and Nordea's own robust internal control framework. This ensures that customer data remains protected, operational risks are mitigated, and the integrity of financial operations is maintained. An incorrect approach would be to implement changes based on anecdotal evidence or without a comprehensive impact assessment. This could lead to regulatory breaches, such as violations of data privacy laws, e.g., GDPR as applied in Sweden, or internal policy violations related to customer onboarding or transaction processing. Another incorrect approach would be to focus solely on cost reduction without considering the potential downstream effects on compliance or customer experience. This could result in processes that are cheaper but less secure, less compliant, or detrimental to customer satisfaction, ultimately increasing reputational and financial risk for Nordea Bank. A further incorrect approach might involve bypassing established change management protocols, leading to unintended consequences and a lack of auditability. Professionals should employ a decision-making framework that begins with understanding the regulatory landscape and internal policies. This is followed by a detailed analysis of existing processes, identifying areas for improvement through objective data and stakeholder feedback. Any proposed changes must undergo a rigorous impact assessment, considering regulatory compliance, operational risk, customer impact, and ethical considerations. A phased implementation with clear monitoring and evaluation mechanisms is crucial to ensure successful and compliant process optimization. Question 20. Operational review demonstrates that the current manual reconciliation of interbank payment confirmations at Nordea Bank is time-consuming and prone to human error. To improve efficiency, a proposal has been made to automate this process using a new software solution that aggregates data from multiple sources. However, the proposed software has not undergone a formal review by Nordea Bank's compliance and risk management departments to assess its adherence to data privacy regulations and its impact on the integrity of financial reporting. Which of the following represents the most appropriate course of action for Nordea Bank? Option A. Proceed with the implementation of the automated software solution immediately to capture efficiency gains, assuming that standard data handling practices are sufficient. Option B. Halt the implementation and initiate a comprehensive review by the compliance and risk management departments to ensure the software solution aligns with all relevant regulatory requirements and internal policies before proceeding. Option C. Delegate the responsibility for compliance review to the IT department, as they are best equipped to assess the technical aspects of the software. Option D. Implement the software solution with a temporary manual oversight process, with the intention of formalizing compliance checks at a later stage once the system is operational. The correct answer is A. Proceed with the implementation of the automated software solution immediately to capture efficiency gains, assuming that standard data handling practices are sufficient. Explanation. This scenario presents a professional challenge because Nordea Bank, as a financial institution, operates under stringent regulatory oversight. Process optimization, while aiming for efficiency, must not compromise compliance with these regulations or ethical standards. The challenge lies in balancing the pursuit of operational improvements with the absolute necessity of adhering to the regulatory framework governing financial services in the relevant jurisdiction. Careful judgment is required to identify optimization strategies that enhance efficiency without introducing risks of non-compliance, data breaches, or unfair customer treatment. The correct approach involves identifying and implementing process improvements that are demonstrably aligned with Nordea Bank's internal policies and the prevailing regulatory framework. This means any optimization must be vetted for its impact on data security, customer protection, anti-money laundering AML procedures, and reporting obligations. For instance, automating a customer onboarding process might be efficient, but it must ensure that all necessary Know Your Customer (KYC) checks are still performed rigorously, and that data privacy is maintained according to regulations like GDPR, if applicable to Nordea's operations in the relevant jurisdiction. This approach is correct because it prioritizes regulatory adherence and ethical conduct, which are foundational to maintaining trust and avoiding severe penalties. An incorrect approach would be to prioritize speed or cost reduction without a thorough assessment of regulatory implications. For example, streamlining a transaction monitoring process by reducing the number of alerts reviewed could lead to missed suspicious activities, violating AML regulations, and potentially exposing Nordea Bank to significant fines and reputational damage. Another incorrect approach would be to implement a new customer communication system that inadvertently collects or shares customer data in a manner inconsistent with data protection laws, leading to breaches of privacy and regulatory sanctions. Similarly, adopting a new reporting tool that does not accurately reflect regulatory reporting requirements would be a direct failure of compliance. Professionals should employ a decision-making framework that begins with understanding the regulatory landscape relevant to the proposed process change. This involves consulting compliance departments, legal counsel, and internal policy documents. The next step is to conduct a risk assessment, specifically evaluating how the proposed optimization might impact compliance, data security, and customer rights. Solutions should then be designed with compliance built in, rather than as an afterthought. Continuous monitoring and auditing of optimized processes are crucial to ensure ongoing adherence to regulations and ethical standards.